Hello, good afternoon, and welcome to all the participants. We had announced our results yesterday, and I'm sure most of you would have gone through it and seen them. Our revenues in the first quarter were only about 45 crores, as against 85 crores we have achieved in the previous year, and all of us know the reason for that. And since the fixed costs remain fixed, we don't change much. Our EBITDA, which was positive last year, same quarter, has become negative, around -5 crores. And the PAT obviously has come again in line with that at around -10 crores. So this is a very dismal performance, not at all good. COVID might be a part of the reason, but definitely, we at our own end need also to improve our own performance with our own management, and that's what we have been trying to do in last 2-3 months. The sales, which was at around 50% level or 60-70% level in May and June, has improved since then. There has been improvement in the sentiment as well as in the industrial environment. Overall, activities are slowly resuming, and we have been able to cover up sales to the extent of 80-90% now in the previous 2 months. So far as operational parameters are concerned, so we are now focusing on our cost. We have been able to control our cost both in the Q1 and as well as subsequently. And that is not only the fixed cost, but also the variable cost by way of raw materials and by way of our logistic cost. Apart from that, now we have been focusing on containing our debt. Our debt continues to remain at around 125 crore level, which has been the case for past few months. And going forward, we are hoping that things will improve on all the fronts in terms of sales, in terms of cost, and in terms of overall profitability. Our immediate term target is to become cash profit, and once we achieve cash profit, we will plan for net profit. For this, the two-pronged strategy being A, smoothen our operations. We are trying to make our operations and productivity as high as possible. And secondly, focus on sales, particularly in a very focused and segment-wise manner, so that those segments which are kind of a low-hanging fruits for us, we can focus on them and try to get some additional sales. Both of these are bearing fruits, and we are hoping that in the coming months, things will turn around. With these opening remarks, I will invite your participation. I have the full team with me. In addition to Mr. Ashish, who is the CFO, I have Minal, which is looking after marketing. I have Anil Pandey looking after sourcing. I have Mayank looking after sales, and of course our CS, Mr. Gautam. I will now invite questions from our participants.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to the participants, anyone who wishes to ask a question may press star and 1 now. The first question is from the line of Naitik Modi from OHM Portfolio. Please go ahead.
Hi, thanks for the opportunity.
Mr. Modi, can you speak closer to the handset, please?
Yeah, could you give us And the working capital for the quarter?
Pardon me, please. Hello? What is the question, please?
The question is, how has been the working capital for the quarter?
So working capital, we have been maintaining at around 105 crores in total, right from beginning of the quarter to the end. So despite low sales, we have tried to increase our collections of the old dues and thereby maintain the total working capital at around 105 crores.
Okay. And the last quarter we had taken one-off for provision for doubtful debts. So are there any further doubtful debts still pending?
So in the last quarter, we had taken a provision for doubtful debts, which were there for a long time. As on date, there is no other addition to any doubtful debt after 31st March 2020.
Okay, no, I was referring to the previous doubtful debts, the historical doubtful debts that we had. So is it safe to say that the historical doubtful debts are done with now?
They are all done with now. There are no more doubtful debts.
Okay, and sir, there was one pending insurance claim that we were supposed to receive. So what is the status of that?
So in total, we had 3 insurance claims, one for our Howrah fire, one for the Nasik, which was loss of profit, and one was for Nasik for installation of the plant. Ashish will give you the complete breakup.
Thank you, sir. On the Howrah case, we had received a sum of 11 crores in the previous financial year, after deduction of around 3 CR. We have gone in for an arbitration on the same. Arbitration proceedings were in full swing till the month of February 2020, after which they have been put on hold owing to COVID. We expect the arbitration proceedings to start again towards the end of September 2020. From this stage, there will be witnesses and cross-examination process that will start, and we expect that once the proceedings start, we should have a final award from the arbitrator in 3 to 6 months' time. That's on the Howrah insurance piece. Talking about Nashik, we had 2 claims. The first one was on loss of profit, and the second one was on replacement of the plant. As far as the loss of profit is concerned, our final assessment was made at around 18.5 CR. We received 14 CR in 2 tranches of 10 crores and 4 crores in the month of December 2019 and March 2020 respectively. On the balance, we are in regular touch with the insurance company and we expect them to disburse it sooner. And on the third piece of the replacement of Nashik plant, we had a claim of 35 CR on the same. Nashik plant was rebuilt last year and the surveyor has done his detailed survey. The report got delayed owing to COVID. I am given to understand now that the report has been submitted to the insurance company and they have assured us that on closing the loss of profit claim for Howrah, they would pick this up and close it next. So ladies and gentlemen, that's the update on the 3 insurance claims as far as Shalimar is concerned.
So realistically speaking, how much are we expecting more from the number one from the Howrah arbitration and number 2 from the latest report that has been submitted for the Nasik plant?
See, Howrah, so far as insurance company is concerned, they have given us our claim. It's an arbitration for the additional amount. So even if we get couple of crores, 2-3 crores, I think that's good enough. So far as balance is concerned, based on the surveyor report, we expect that we should be getting anywhere between 14-15 to 16-17 crores from the 2 claims.
So put together broadly, we are expecting about 18 odd crores that we should typically receive, right?
We should be getting, yes, we are targeting 18 crores, you're right.
So this is before end of third quarter would be a realistic timeline?
I think by end of the year, because insurance companies in this COVID, they got a good excuse.
Okay, all right. Fine, thank you, sir.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Anup J, an individual investor. Please go ahead.
So I had two questions. One was with regards to the employee expenses coming down this quarter. Is that expected to be sustained? Is that some sort of cost-cutting measure, or will it be temporary?
Yes, employee expenses will come down, and as I was mentioning to you, cost control has been one of the major step we have taken. That includes not only so far as employees are concerned, that includes in other areas, including traveling, including administrative expenses, other expenses. Going forward, they may not remain at the same level. As the volumes increase, as the business increase, there may be some increase to it, but definitely they will not reach to the previous level. There will be some cost reduction which is almost permanent.
Understood, sir. So as compared to your Q1 last year, it was around 14 CR. You are saying that it will stay under that limit, but it will increase from the current that is there.
You are right, sir.
Thank you. And so my second question was, what was the exceptional items of 2 CR expense of this year?
My colleague, again, Ashish will explain.
Thank you, sir. Thank you for asking that question. We had pulled back some old inventories across the country to our plants in order to process them. Some of them were damaged, some of them were old. We could process around 70 to 80% of it. The balance could not be processed, and we got a survey done for the same, and we found that the inventories of around 2.5 CR and the realizable value is 50 lakhs. So the management took a prudent decision to provide for 2 CR towards write-off of the inventory, and that is what is being depicted under exceptional item expenses.
Understood. So now on the doubtful debtors part as well as the inventories part, we are clear, and you are not expecting any further exceptional expenses like that?
We hope not to have anything.
Okay. Thank you, sir.
Thank you. The next question is from the line of Hitesh Sharma, an individual investor. Please go ahead.
And to the entire management, I hope all of you are doing well. I had 3 questions. So the first one, at some point in time last year, you had indicated that the break-even revenues, the cash break-even revenues was for you guys was around 95 crores on a quarterly basis. Correct me if I'm wrong, but I think the number was around that. Given all the cost control measures that you guys have enforced, is there any change to the number that you had indicated last year? That's the first one. Second, given the recovery that you're looking at, how should we look at debt reduction in terms of the time frame you're targeting? I understand you are expecting about 18 crores of receipts from your insurance claims. Also, is there any restructuring of debt that you're looking at, especially given interest rates are getting more favorable? Third, there was a lot of work that you guys had done on your supply chains and your distribution network. Given all the disruptions that you've seen, especially in times of COVID, how does Shalimar's positioning now, how should we look at Shalimar's positioning now versus the larger players? Thanks. Those were my 3 questions.
You are absolutely right in stating that we had quoted a number around 95 to 100 CR of sales that we achieved. We would be able to do break even. The number almost remains the same. It's only a little bit of mix between decorative and industrial, which can swing the number a little bit here or there, and hence the number can be in the parlance of 90 to 95 CR at the best. And we are hopeful that we will be achieving these numbers very soon, and we will be able to break some good news to the street that Shalimar has turned back into greens. So that's on the cash break-even part. Over to you, sir.
Debt reduction, 18 crores.
Yes, debt reduction would happen on 2 accounts. One account is through realization of our insurance proceeds. Definitely that would help us in debt reduction. The other is cash loss. Currently we are incurring cash loss. We incurred cash loss of 9 crore in the quarter that we just closed. The moment we turn cash positive, which is our basic and the first aim to do, that will also help us in debt reduction. As far as restructuring of debts is concerned, we are not looking at it right now. Our primary focus is to turn cash positive, and but yes, if an opportunity comes through, we will definitely look at restructuring of debt as well.
So, on the supply chain and distribution part, like you mentioned, how will it impact our position? We've done a lot of work last few quarters. In fact, this was the time when we were about to reap benefits on it, and in fact, despite COVID, we're seeing those results come to us now. Distribution, there's been a certain expansion that we've managed in a few geographies, and we want to carry on with it. We've experimented with different formats of distribution, so hopefully we will see results of it in the next few quarters.
Mike, you can add something.
Coming to the growth levels, you were asking about performance vis-a-vis competition. So I think in quarter one, competition also degrew by approximately 50%. And we have also degrown by roughly 48%. But if you look at the quarter two results, we have been able to manage our last year numbers. The competition and the market is also moving in the same direction. Hopefully, starting September, we will start registering double-digit growth.
Am I correct in assuming that your cost of borrowing should be around 15%, so 20 crores annually on 125 crores of debt is the interest payment, right?
Our cost of borrowing last year was slightly high, but to the tune of around 13.5-14%, and it has been reduced to 12.5% this year.
Sure. And so specifically, if you look at the two segments between industrial and decorative, where do you see the revival happening faster?
So revival is happening in both the segment depending on the recovery. Initial few months, that is May, June, and even July, August, we have seen that the decorative segment is reviving faster because it was all dependent on individuals or in the household segment, and industry was not able to restart for different reasons, including lockdown and gathering and labor. But I think now onward, it is the industry which is trying to regain. And so far households are concerned, that trend continues.
Sure, thank you. I'm sorry I'm taking too much time, but just one last question. Now on the pricing side, do you foresee that, in case demand remains soft, there can be an issue around pricing also because of competitive reasons? So, the larger players might bring down, there might be some stress on pricing going forward?
So there is a temporary pressure on prices because after this COVID stuck in quarter one, there was pressure of inventory on competition. So yes, for the last 4 or 5 months, we have found it difficult on that part. But I think with the season coming in, the prices will be back to normal now. So I don't think there is going to be much competition on that front.
Sure. Thank you so much, and wishing you all the best.
Thank you. The next question is from the line of Sharat Singh, an individual investor. Please go ahead.
Hello.
Yes, please.
Hi, sir. Good afternoon, sir. Thank you for taking my question. So my question is, again, regarding the pricing, is there any change that is expected due to the fall in crude prices?
Sorry, can you repeat the question again?
Pricing, reduction in prices due to crude prices falling?
There may be a marginal impact, not significant, because crude went down significantly. Again, it has come up. It is significantly stable now, and to that extent, dollar also was weak. So rupee or rather was weak. So I think there has not been much of a change, but yes, there has been some reduction in the overall raw material prices, and because of that, there has been some corresponding decrease in the paint prices of those paints which are dependent on crude.
Okay. And so, regarding the split between decorative and industrial segment, how do we look to which industry do we look to cater to going ahead majorly? Do we focus on the industrial part or the decorative part? I mean, once things normalize, maybe 3 months, 6 months down the line.
So, in general, our industrial portfolio is around 30-35%, and our decorative portfolio is around 65-70%. Now, I think that percentage should remain same because we'll be focusing on both, not on either one. And within industrial, we look at steel, metal paints more, like pipe paints, and also we look at industrial paints by which industrial facilities like oil and gas tankers or buildings or pipelines. These are the areas where we look. We are basically in corrosion resistance paint. So I think we'll be focusing on both, and both of them should grow together.
So, regarding the industrial focus, so is it fair to assume like basically the application of our industrial sector will be in the capital investment part of the industry, as in when plants are set up, when there's capital investment happening, that is when the demand comes, or in the industrial segment?
That is also there. When the new plants come up, obviously the demand for paints is higher. But in our case, in addition to new plant like Bathinda refinery is coming, a lot of our paints are going there. Like the new bridge which is coming up in J&K, a lot of paint is going there. But in addition to that, existing plants, they need this paint for their upkeep, for their maintenance. So all the refineries, oil and gas refineries, Indian Oil and other refineries, they buy our paints for their normal maintenance. In addition to that, all the pipelines, so all industrial plants have a lot of pipelines which are to be painted on a regular interval, and a lot of our paint is used there as well. So paint is required both for the new project as well as significantly, maybe 60-70% for the maintenance of the old assets.
Okay. So one last question, sir, if I may. Regarding the decorative segment, how do we intend to grow our share there? I mean, so when I go to suppliers, I ask, they always say only the existing brands, people want the existing brands. So how do we intend to capture the decorative segment here?
See, in decorative, our biggest challenge has been consistency of channel. So if we look at our historical data, we have some 5,000 dealers on board, but only 2,000 dealers bill on a regular basis. So our basic objective is to get all those 5,000 dealers on board in the first place, and secondly, doing the numeric expansion. So once that foundation is laid down, I think we'll be around 28-29 crores per month turnover going forward, maybe 7-8 months down the line. So distribution expansion is a basic mantra.
So what I want to ask is, how do we appeal to the consumer? As in, ultimately the customer has to ask for the brand. What are we doing in that respect?
So on consumer, we right now are pulling a hand a little bit back because we don't want to invest very heavily on consumer currently. Instead, we are putting all our money behind an influencer, which is a painter for us. We've realized that investing in painter gives you much more quicker business results than investing in a consumer. While consumer, we will keep working towards it, but be looking at low-cost initiatives and essentially sticking to digital. But honestly, going the way the business is right now, I don't see myself investing very heavily on the consumer piece in the immediate future. But as and when the business stabilizes, we will obviously be investing more.
Okay. Thank you, ma'am. Thank you, sir. That's all. Thank you so much.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Naitik Modi from OHM Portfolio. Please go ahead.
Sir, could you please give us some sense on how the volumes for the last few months have been?
So, see, last year, in the month of August, I think our revenue was close to, our net revenue must have been close to some 26-27 crores. And I think now we are not yet there, but we are very close there, maybe 90-95%. So if I take Q2 as a whole, July, August, September, our last year revenue was perhaps around 80 crores or odd. And this year it will be a shade less, maybe 90-95% of that. So we are at around 90% of our last year level for the current month.
Okay. And sir, did we avail of the moratorium facilities for the quarter?
Yes, we did. We availed for the moratorium facility from all our consortium bankers.
Okay. And may I request if you could upload the presentation which you used to do, which you've done for the third quarter. So if you could do a similar presentation, it will be very helpful.
Just please repeat your suggestion.
I would request you that if you guys can upload the presentation for the quarter.
Okay, we will upload it.
Yeah. Thank you, sir.
Thank you. The next question is from the line of Kuj Joshi from Kitara Capital. Please go ahead.
Yeah, thank you for taking my question.
So, Mr. Joshi, can you speak closer to the answer, please? Your voice is not audible.
Hello, is it clear now?
Yes, sir.
Thanks for taking my question. So I just want to understand whether we have taken any price increase compared to last year.
Okay, AC paint is a very stable industry. If we see year after year, the prices remain within a close range of 2 to 5% plus minus. As compared to last year, the raw materials prices have not gone up. So if I compare with 2020 versus 2021, the raw material prices are almost same or even might have been slightly under pressure. So we have not taken any increase. In some selected segments, there might have been a minor reduction in the prices, particularly those which are crude based. Otherwise, our prices in current year 2020-21 are same as 1920.
And so whether our product mix has increased to a more high margin products or something like that? The product mix is also same.
Product mix after COVID, you want to say?
So the product mix post-COVID is more or less similar. In fact, the emulsions have reduced a bit in quarter one, but I think the higher profit-making products, which are emulsions and water-based products, they both have started growing since July. So I think we'll be overall on the same levels in this month of September. I mean in quarter two.
Yeah, got it. Okay. Thank you so much.
Thank you. The next question is from the line of Neha Indrani from Minora Advisors. Please go ahead.
Thank you for the opportunity, sir. I have a couple of questions. The first one being, given the fact that we're already at a debt level of 125 crores, would we require any fresh funds if we do not meet our break-even target? When do we expect to be cash profitable? The third question that I wanted to ask you is, if you could tell us, you'd started a wellness business with the sanitizers and the affiliate products. So how is that going? And if you could give us the current utilization across the plants. And my last question is, I wanted to understand the inventory level at the dealer level. Because if we are currently looking to, go from 2,000 functional dealers to 5,000 dealers, then would that mean in a way that our sales could pan out by just stocking, at the dealer level itself? And how long does it take for the dealer to move into, the consumer level demand? So if you could give some color on that, it would be very useful. And also if you could help us understand how many, what has been the run rate on the increase in the functional dealers that you've been adding since, you've started turning around the business. So these are the few questions I had.
Yeah. So, good list of questions. Okay, the debt level is around 125 crores. Going forward, we will try to manage within that plus minus 10%. We don't intend to increase it substantially, but there may be some increase depending on the operations. But there will not be a significant increase. Instead of 125, there may become 135 or maximum or 140. It won't be a significant increase. And you mentioned if break-even is not achieved, I'm sorry, that's not an option with us.
Okay.
We don't look at that. So far as cash positive is concerned, we wish it was yesterday, but definitely it has to be shortly. Can't wait any longer. On the healthcare business, Minal will give some updates.
So currently it's a little too early to give you a very long-term picture on it because we started just a few 2 months back. So what we right now trying to do is to establish the product and the logistic piece on it, and we are currently supplying to our existing clients. So we have a lot of industrial clients that we service for our paints. So we're servicing them on this product portfolio as well. However, going forward, we do want to look into this segment, and we will start working towards building distribution first and foremost. And we'll see how it goes before making a decision on how much of investment we'll want to put into this segment. But as of now, it's going well because we are trying to just service the existing clientele that we have, and in parallel, we are gradually trying to work on distribution.
On the inventory level with the dealers and all that, Mayank?
Okay, coming to your question on the inventory level and the improvement in the distribution. So last year we were roughly, as I told you, we were roughly dealing with 2,000 dealers on a monthly basis. This number went up to 2,400, 2,450 by the end of March, but unfortunately due to COVID, it reduced in Q1. As I said, it should take another 7-8 months to reach that level of 5,000. And once that happens, we'll be able to have a consistent sale of 27-28 crores. So basically this model of increasing number of dealers will be around more on replenishment, so I don't think it is going to impact the dealer inventory so much. The idea is to increase the depth of range rather than increasing the width of the range rather than increasing the depth. So I don't think it is going to impact the dealer inventories much. We are aiming at increasing the rotation.
Got it.
But in parallel, because we've also worked on servicing these customers well, so I don't think it'll hugely impact our stock.
Got it. Okay. I think all my questions are answered. Thank you.
Thank you. The next question is from the line of Anup J, an individual investor. Please go ahead.
So I had another question. From FY20 numbers as compared to FY19, you all have shown a pretty good growth of 19-20% as opposed to competition. Despite though they have a larger base, they've not been able to show similar level of growth. Can you please tell us some of the initiatives that you might have taken, a couple of examples that have helped you get these good numbers?
So first of all, the first initiative we took was working on the middleman, which is the painter and contractor, because so though we were doing primary, our secondaries were really low, and that really helped in increasing the traction in the market. Hence, the primary again increased. We already talked about the distribution, so we improved our distribution from 2,000 active dealers to 2,500 dealers. The third initiative we took was we worked on the higher profit-making items, which was emulsion. So we had a special intervention for the market, which was a silver coin scheme. I think these are the three basic initiatives that we took in sales. Apart from this, servicing was a very important task. So we started working on having better availability at depots and at customer level, which actually increased the throughput. So these are the basic things that we did in last year.
Got it. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Naitik Modi from OHM Portfolio. Please go ahead.
Yeah, thanks again. To one of the previous participants' questions on the dealers, you mentioned that during COVID you lost dealers. Did I hear it right?
Yeah, actually not really lost those dealers because most of the markets were under lockdown. So, on and off. So the number of dealers that were available for billing reduced. Lots of market were closed during this period. So that is how we lost those number of dealers. It's not actually that we lost them.
But now they have come back, and I think in the month of August, all those dealers whom we were billing in the month of January, March, they have come back, except those where there have been some payment problems. So, we are very strict on payments. Now, in case the dealer for some reason has payment problems, then we try to restrict the business with those dealers.
So typically, any particular dealer, what is the repeat business for dealers over, say, 6 months or a 1 year period? I mean, let's say a dealer started at the start of the year, and so how many dealers actually stay to the very end of the year and they are active dealers?
So normally, people who start working with us and who have worked with us for 3-4 months, they continue with us for a long time, unless until they have certain problems of their own, whether it's financial problems or their business problems or their partnership problems. But I would say that 90-95% people who start with it and do business for 2-3 months, they continue with us for a long time.
Okay, sir. Thank you.
Thank you. The next question is from the line of Neha Indrani from Minora Advisors. Please go ahead.
Actually, the question is in the same vein. So I just wanted to understand, given the COVID situation, correct me if I'm wrong, but as a business, it's only when we work with, our supply chain and people who are in pain, does it really affect in the long term? So, I just wanted to understand, giving financial support to our dealers, is that something that we would, instead of people who do not pay us, if we cut them out of business, is that a good long-term strategy? Just to, understand from you. Just to also understand, like the 5,000 dealers that we're targeting, is it that they're dealers who already are selling, other paint companies, and we're looking to convert them back to selling our paint as well? And how easy do you think, just to kind of qualitatively understand how easy it is that you think that the volumes can pick up?
I think I totally appreciate your suggestion, and we exactly do the same. When somebody has a difficulty in payments, we support them. Mm-hmm. We support them, and we try to take them along with us, and we kind of give them the facilities which would help them. Having said that, they are also quite strict that people, they are sincere about payments. They understand that a time limit has been given and payments are made. We check up with them, what are the problems they are facing, and we try to help them. Sometimes we, change their period of payments. We give them extra time. We give them extra 10 days, 15 days, 1 month. And we give them support wherever they require in terms of low inventory. If they want to keep low inventory, we help them by giving them material faster in a shorter quantities. So we all do all that which a dealer would need to do if he has any problem. And I think a lot of our dealers are making use of these facilities, and that's how we have been able to save our dealership network. Regarding the increase in dealers are concerned, Mayank will.
Okay, coming to that question of 5,000 dealers. So this is the base that we used to have. These are the dealers which we already had on board, but some of them are not good pay masters. So obviously these people will be churned out of the system. And balance, yes, we have to go and convert those dealers who are selling competition. So we were not able to convert them earlier due to our own challenges. But with the sort of support we are providing, with the sort of schemes we have, so yes, it has to be a conversion from competition to Shalimar.
Got it. And so if I can just do a follow-up on this, can you give us your geographical spread as well as your capacity utilization across the plants?
So from a sales and distribution perspective, north and eastern part of the country, we are pretty strong. South and West, we will take some time to build to that level. From a capacity utilization perspective, I'll just hand over to my colleague.
So, if you talk about the capacity utilization, as you know, we have 3 plants. One is at Nashik in West, and the other in Chennai in South, and third one at Secunderabad in UP in North. So, because of this COVID year, in the first quarter, the production capacity utilization was very less. It was 30-35% only. But of course, after that, we have picked up. In July, August, it has gone to around 60-65%. And as the business progresses, as the volumes get sold in the market, we will very soon touch to 80-85% of the capacity of all the 3 plants.
Got it. Okay, thank you so much.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Pawan Rathi from Edelweiss. Please go ahead.
Yeah, thank you for the opportunity. Sir, I wanted to understand how do you plan to achieve the 1,000 crore revenue mark which you have guided for in a media interaction recently in the next 3 to 4 years? So what's the roadmap for it? Can you please help with that?
Yeah, you see, we are expecting that the situation will normalize in a couple of months. So whatever is the COVID impact, that should be limited to only current year. So current year, we do not expect a significant increase in our numbers as compared to last year. We may at best reach close to it. Having done that, we have a capacity today to take the number to 1,000 crores. So capacity wise, there is no problem. We won't need any major capex. However, we will need a significant jump in our sales and distribution network. Now, towards that end, we are trying to work out on the basics, the fundamentals. And one of the basic fundamentals of consumer product is your supply chain. We had significant issues in our supply chain, whether it is warehouses or it was supplying materials, deliveries, and those things. Fortunately for us, quality-wise, our quality stabilized last year. We had problem before that, but since last year, our quality has been very well accepted by the customers. In fact, our feedback is it's a shade better than the competition. So having established the quality, the second focus was supply chain. In supply chain, we are not yet at par with the competition. We are working towards it. Even today, I will say we are 20-30% behind the competition. In next 6-7 months, that is going to be our focus. We have got number of strategies towards that. We are working on different models, including using the current logistic players for supply directly from plants, including buying our own transport, including modernizing our hubs, our warehouses. So these are some of the strategies. Our focus is on supply chain. And the third thing is the schemes which we give to dealers. Here again I will say that our current model of dealer scheme, distribution schemes, servicing the dealers has been very well appreciated by the community. So, and that's one of the reasons why you are seeing that there is a confidence within our team that we will be able to increase our dealers from 2,000 to 5,000 in this period. So this is so far as decorative is concerned. Again, coming to the second part, which is 35%, which is industrial. Here we have got very good products now. So in last 6 months, we have developed some new products. Again, got very good feedback from the market, and we increased to invest some more in R&D to achieve those industrial products, to do some more industrial products. So there are still some products which we are not manufacturing, for which there is a good market and people are importing or using from somewhere else. So for industrial is concerned, our focus will be on R&D, developing those products. We have done already some job. We have developed some new products, sent them for testing. So these two, strategies: one on supply chain and dealer initiative, and second on R&D, should take us next 3 years to 1,000 crores, 3 to 4 years.
All right. Thank you for that. So can you please help me with the utilization level for FY20? What was it in FY20?
So capacity utilization, by the end of the 20, we had a capacity of around, I think, between 5,500 to 6,000 KL per month. And our production at best used to be between 2,500 to 3,000 KL, whereby our capacity utilization was around 50%.
All right. Thank you for that.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Kush Joshi from Kitara Capital. Please go ahead.
Thank you for the opportunity once again. So can you just...
Mr. Joshi, can you speak closer to the handset, please?
Yeah. Is it clear now?
Yeah.
Yeah. So can you just explain the new products which are developing in the industrial side? What segment which will better, and can you just throw some light on that? Thank you.
So far industrial side is concerned, we are focusing on primarily 2 areas. One is on pipelines. All steel structures, pipelines, they are big demand, both for domestic and export. I will explain to you, we are doing some R&D so that we can develop paints for export of pipes, which require some special treatment and special testing. And then we are working on paint for the structurals. So currently we have a significant number of paints for the structure, but still there are many other areas where we do not have. And of course, slowly and steadily widening our network. So even today, our penetration in the industrial market is not even, I'm talking of corrosion resistance market, is not even 2%. So we have a huge market available there, and we hope that we will be able to penetrate more of the industrial market.
Thank you so much, sir. All the best.
Thank you. The next question is from the line of Bilal Qureshi, an individual investor. Please go ahead.
Hello. Thanks for the opportunity. Sir, I wanted to know the debtors have been reduced significantly to 75 days. Okay. So do we expect the debtors to reduce more?
So there has been some reduction subsequent to that also in the month of July. And it has been both because of the special efforts we are doing and also because the sales were low in the month of April. Going forward, we expect debt to be controlled, slightly lower than the current level, but definitely not a very big reduction, because now when the sales will be going up, our debtors also should be slightly moving up. So all in all, our debt level or a debtors level may see marginal change.
Okay. And sir, in one of your presentations, which you have been updated yesterday, okay, it was written that there was a pace of recovery in some of your semi-urban areas and all something. And what kind of decorative utilizations are we on?
So when we say semi-urban areas, we mean not the metro cities, smaller cities. And these are the cities where the impact of COVID was limited till now. I hope it will continue to be limited.
Yeah.
And these areas typically use medium kind or economic kind of paints, decorative paints, and that's what we have been pushing there. Now with more and more metro areas also opening, we expect demand for the premium range also to improve.
And sir, one last question. How's the demand panning out from June to after the lockdown, which was open in June till August? How is the demand panning out?
Yes, so quarter 1 was not that good really, but if you look at the July numbers, it has improved. August we have been able to grow over last year. So yes, the demand is increasing. The market is also improving. The middlemen, painter contractors also returning to the market from their hometowns. So we see a very positive picture going forward.
Okay. Any kind of guidance should be given on growth? Yes.
Well, let us see. Let's see how because COVID situation still is bad. So it will all depend how the COVID and perhaps China pans out.
Okay. Thank you, sir. Thank you for the opportunity.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and one. The next question is from the line of Sharat Singh, an individual investor. Please go ahead.
Hello.
Mr. Singh, can you speak closer to the handset, please?
So I was thinking, you just said the performance will depend on how COVID and China plays out. How does China affect us, sir, if I may know?
So in case there are tensions in the border, then obviously the whole economy can get affected. And let us see, because if you are observing last couple of days, there has been a lot of generation in the so far as tension around the border is concerned, and we only hope that these tensions reduce, because a lot of effort from the government is required to revive the economy, particularly spending in the government sector, in the infrastructure sector, in the public PSUs. So we are hoping that there should be stabilization in the economy, and there should be more investment by the government in the infrastructure related fields.
So there's no company specific issue as per the China is concerned. It's only the macro scenario which affects us.
Macro scenario, exactly.
Thanks.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and one at this time. Participants, to ask a question may press star and one now. A reminder to the participants, anyone who wishes to ask a question may press star and one at this time. Participants, to ask a question may press star and one. As there are no further questions, I now hand the conference over to Mr. Ashok Kumar Gupta for closing comments.
Thank you, my dear friends. There has been very good interaction, and I think all the areas were covered. We are seeing some early green shoots coming up, and we hope that the worst is behind us, and from now onwards things will only improve. Thank you once again for your participation.